Hey everyone, welcome back to Corporate Decoder if you want to hear about the latest insider shuffling and shareholder agreements. Well, buckle up because this one is packed to the brim. First off, Howard Hughes Holdings is getting ready for its 2025 annual meeting of stockholders, and it seems like William Ackman, the executive chairman, is really trying to get everyone on board for a new strategic direction. He's personally inviting shareholders to attend and even sit in on an open microphone session. That's a bold move, definitely trying to boost engagement. The company is based in the Woodlands, Texas, and they're holding their big meeting in New York City on September 30, 2025. So if you're a shareholder, you've got homework to do. Now let's dive into what they actually want to talk about at this meeting. They're voting on electing new directors, approving executive compensation, which is always a hot topic, and greenlighting a new equity incentive plan. Think of it as a plan to give employees stock in the company as a reward. Lastly, they're asking if we're okay with their choice of accounting firm KPMG for 2025. Let's talk about the board of directors. They want to elect 11 directors, and it looks like William Ackman is nominated again as executive chairman. He's been in that role before and also served as regular chairman for a while. It seems like he's really hands-on with this company. William Ackman is 59, and his main gig is running Pershing Square Capital Management. He's also involved with the Pershing Square Foundation, which sounds like a charity. He's been on other boards too, like Universal Music Group NV before. His experience in investments and real estate is what they say makes him a valuable insight for the company. Then there's David Yoon, 58, who's been a director since 2023. He's a co-founder of Alakai Group, and before that he had some pretty big roles at Samsung Electronics as Chief Innovation Officer and leading Samsung Next, which is like a venture capital arm for startups. He also worked at Google and AOL in the past. They think his experience in media and tech is super valuable for looking at new company trends. Ben Hakim is 49 and a director since 2024. He's a president at Pershing Square Capital Management and worked at Blackstone before that. His real estate investment and capital markets experience, they say, brings good perspective to the board. Ryan Israel is 40 and a director since 2025. He's the chief investment officer at Pershing Square and was previously an analyst at Goldman Sachs. His investment and capital markets experience are seen as beneficial. After now, let's look at the real meat and potatoes, the financials. The company spent about $5 million on their accounting firm KPMG in 2024. This is a pretty big jump from the $3.3 million they spent in 2023. Most of that increase came from audit-related fees, which included work on spinning off another company called Seaport Entertainment. It's normal for these costs to go up when there are big corporate changes, but it's still a significant increase year over year. When we look at who owns the company, William Ackman and his affiliates through Pershing Square are the big players here. They own over 46% of the company's stock. That's a huge chunk and means they have a lot of say in what happens. They also mention Vanguard owning over 7%, which is pretty standard for a large investment company. William Ackman himself has a massive stake, over 27.8 million shares. This shows his deep personal investment in Howard Hughes Holdings. Looking deep into the relationship with Pershing Square, we see some really interesting agreements. They have a shareholder agreement that gives Pershing Square the right to nominate a certain number of directors depending on how much stock they own. If they own 17.5% or more, they can nominate 25% or more, they can nominate 25% of the board. That's a solid way for them to maintain influence. They also have a services agreement with Pershing Square, where Pershing Square will provide investment advisory services, business development, and other support for a pretty hefty fee. We're talking $3.75 million per quarter, plus a variable fee based on the stock price. This agreement is for 10 years, and it highlights how closely aligned Ackman's firm is with the company's strategy. There's a voting cap in place which limits Pershing Square's voting power to 40% on most matters, which is interesting, but it has an exception for electing their own director nominees. This means they can still get their people on the board no matter what. Now let's talk about how the directors are paid. The annual retainer for board service is split between stock awards and cash. Directors get a base retainer of around $220,000, which includes a $45,000 restricted stock award and $75,000 restricted stock award and $75,000 in cash. The chairman gets much more, and committee chairs also get extra pay. William Ackman, by the way, has waived all director compensation. That's not unusual for major shareholders. The company is asking for approval to issue 2 million new shares under their 2025 equity incentive plan. This means they can give out more stock awards to employees and directors. They say this is about attracting and retaining talent, but it also means more dilution for existing shareholders. Their burn rate, or how fast they use up these shares for awards, has been pretty low. In 2024, it was 1.111%, which is good. This means they're not giving out stock like crazy. The executive compensation is designed to tie pay to performance. They use base salary, annual incentives, and long-term equity awards. A big chunk of compensation is performance-based, which is what shareholders like to see. For 2024, David O'Reilly, the CEO, had a solid package. His base salary was $1 million. He got a $2.1 million in stock awards. That's a total compensation of nearly $5.8 million in stock awards. That's a total compensation of nearly $5.8 million. Jay Cross, their former president, also had a substantial package with over $4.7 million in total compensation. He retired mid-2025. Carlos Olea, the CFO, earned over $2.4 million in 2024. Joseph Verlaine, the general counsel and secretary, earned about $1.9 million in 2024. And Doug Johnstone, the president of Hawaii Region and National Condominium Development, earned about $1.6 million. Looking at the outstanding equity awards, David O'Reilly has a lot of unvested awards, over 38,000 shares and units. The market value of these unvested shares alone is over $2.9 million. This shows a lot of his compensation is tied up in the company's future performance. Here's a statistic that often raises eyebrows: the pay ratio. The CEO's pay is about 42 times higher than the median employee's pay. While this is common in many companies, it's always worth noting. Now let's connect this to how the company is doing for shareholders. In 2024, Howard Hughes Holdings' total shareholder return was 63.66%. That means if you invested $100 in their stock at the end of 2019, it would be worth about $97.19. It would be worth about $97 by the end of 2024. That's a decent return. Their peer group, the S&P 500 Real Estate Index, had a return of 124. That's a decent return. Their peer group, the S&P 500 Real Estate Index, had a return of 124. That's a decent return, their peer group. The S&P 500 Real Estate Index had a return of 144.92%. So Howard Hughes underperformed its peers in terms of stock performance that year. Even though they had good operational results, the stock market's view was less enthusiastic. The most important performance measures they look at for executive pay are total segment EBT, operating assets, NOI, corporate cash G&A, MPC EBT, and total shareholder return. They're clearly focused on profitability and shareholder value. So what's the story here? Howard Hughes Holdings is solidifying its executive leadership and strategic direction, largely guided by William Ackman and Pershing Square. They've got a new equity plan to keep employees motivated and a clear focus on financial performance as reflected in their executive compensation. However, the shareholder return in 2024 did lag behind the broader real estate market, which is something investors will be watching closely. The company's future hinges on successfully executing its new diversified holding company strategy, and investor confidence will likely depend on them bridging that performance gap with their peers. What do you think about Howard Hughes Holdings and their executive compensation strategy? Do you think Ackman's aggressive involvement is good for the company? Let us know your thoughts in the comments below. If you found this breakdown useful, give us a thumbs up and subscribe for more deep dives just like this. And hey, don't forget to join our Discord community. The link is in the description. Thanks for watching everyone, and we'll see you next time on Corporate Decoder.